Dear students, in our first two parts of this particular lecture, we have understood two important concepts. We have understood the concepts of two important instruments in the banking system. In the first part, we have understood the concept of a check, where we have understood that a check is a negotiable instrument and it has got different features. And in the second part of our lecture, we have understood the concept of a manager's check or banker's check or a pay order. And we have understood that a pay order is actually an instrument issued by the manager or banker of a banker, which is payable locally. Another similar document today we are going to discuss, and that is demand draft. A demand draft is a financial instrument which is used by people for the purpose of transferring money from one place to another. And therefore, please try to understand that a demand draft is actually similar to manager's check or banker's check. Demand draft is also an instrument or a check which is issued by the banker or the manager. But the important point here we should understand is that a demand draft is generally payable not locally but in other locations. And therefore, through demand draft, people can transfer money from one place to another. Whether it is a banker's check or a demand draft, the validation period of the two instruments is 3 months. That is, after the expiry of 3 months, the instrument is of no use. That means there is a validity of these instruments, whether it is a manager's check, banker's check, pay order or a demand draft. We need to understand that there is a validity period. And at present, the validity period is of 3 months. So the transaction or the check will have to be presented to the bank within these 3 months, and then only the transaction is possible, because in this particular period only the check remains valid. After this, the check doesn't remain valid, it becomes a stale check. And to a layman, there is no significant difference between the manager's check or the demand draft, but actually these two modes of payment differ in a number of ways that we need to understand. Particularly for the banker, there is difference, the system is different, and for us common people, we need to understand that a manager's check is similar to a demand draft, but the manager's check or the pay order is payable locally and issued by the banker or the manager of the bank. Similarly, the demand draft is also issued by the manager or the banker, manager of the bank or the banker. However, a demand draft is payable in non-local, non-home locations, and therefore through demand draft people transfer money from one place to another, whereas manager's check people can pay money in the same location, that is in the same city. Thank you.